relationship with Japan. We're very strong, very, very strong financially. They are, they have a weakening yen, and they wanted a little bit of help, and we're always there for Japan. Japan's been very good to us, with the exception, of course, of Pearl Harbor.
Mr. President,
they were not good.
Let's speak now to Seijiro Takeshita. He's a professor at the School of Management and Information at the University of Shizuoka. Welcome back to the programme, Professor. Now, this is the first such intervention in 15 years. So what's prompted authorities to act now?
Basically, it was a desperado situation for Bank of Japan. As I've spoken in your program many times, the Bank of Japan do not have the deep pocket that many people believe. And basically, as you reported earlier, yen was weakening at a situation where, the oil prices have been very, very high. And we were starting to hear the word called inflation, which is a word we haven't heard for more than 2 decades. So obviously, Bank of Japan and the Japanese government as a whole was very much scratching their heads in a desperado situation. So basically, they asked the United States to cooperate, and of course, Japan do have their weapon in many sense. As you again reported earlier, Japan do have the largest amount of U.S. debt. And I'm sure the U.S. would not be very happy about, Japan selling off their treasury bonds, especially at this point. So basically, it gives benefit from both sides to intervene, at least on the short run.
And do you expect this intervention to have a lasting impact on the yen, or will it only provide short-term support for the currency?
The answer is no. And basically, to your latter supposition, yes. I mean, the fundamental has to change. Even if it's a joint intervention, and joint intervention do have some strength, not only means of actual monetary power, but of course, the policy changes that would induce maybe the investors to step back from making aggressive steps. But that said, fundamentals and real demand are what talks at the end of the day. And that has not changed. So basically, yes, we will have people being very cautious about intervention, from a political point of view, but from an economic fundamentals, we know that the interest deviation between the United States and Japan will remain high. So from that point of view, I think what needs to be done is a fundamental changes or policy changes that would convince the investors or the actual participants in the market to believe that the fundamental the direction have changed, or else I think we're just going to nudge back to the weakening yen towards the end of the year.
And Professor, a weaker yen has increased import and energy costs for Japan. So how significant has its impact been on consumers?
Not yet, but we will be, and we are about to feel that from this summertime. The reason for it being is that, inflation worries in Japan is relatively low in comparison to, for example, United States. Our CPI was around 1.7, which is about half of the United States. And for that reason, it was relatively mild, but our vulnerability toward energy is very high, considering that 99.9% of oil is imported. We're not like the net exporter of energy, and we're a total importer. And we are starting gradually to feel the inflationary fear, and we didn't feel that right away because in Japan we have many layers of retail and wholesalers, which basically tries their best not to pass on the price increase. But there's a limit for that. And many of the companies have already announced price rise from this summer. So the Japanese consumer will be feeling this from this summer onwards.
And what can we expect from the Bank of Japan in terms of rates if the yen does indeed continue to decline?
I think there's a very strong message from the United States stating that, Bank of Japan not to go behind the curve, i.e., start raising the rates. But it's very difficult for Bank of Japan to do that because our growth potential rate is not high in comparison to the United States. It's less than half of that. And we are about to see, or we're crossing our fingers to see, private consumption coming back because we're seeing, wage rise for the first time in well over 20 years. But that could be deteriorated by the inflation that we were just talking about, and also future fears about, how the economy or geopolitical issues are going in Japan right now. So, it's very difficult for Bank of Japan to start raising the rate at this point, although there is definitely a pressure from the United States to do so.
Professor Seijiro Takeshita, thank you very much for joining us here on TRT World.
Thank you.